The U.S. and China going back and forth over tariffs, and the opening shots, are these a potential trade war in the making? What could the next step be? Steve Liesman joins us now with an analysis of this.
Well, there's two uncertainties out there, Michelle, created by the president's threat of an additional $100 billion of goods and services that could be subject to tariffs. Will they be put in place, and what products or services are vulnerable? To do that, we look at and we break down the trade relationship. Here are the top 5 imports of China to the U.S., and these are areas or buckets of trade that could be subject to tariffs. Leading the way there are those consumer goods, followed by capital goods, followed by, industrial supplies, autos, and then food and beverage. Now, let's look at you're looking at that quizzically, Michelle.
Yeah, you know why? Because Mnuchin was on last week and kept saying they only buy $130 billion worth of stuff, and all the number that's come out is $130 bucks.
No, this is the other way. This is from China to the U.S. These could be subject. Now we're going to look at the other side of the relationship, what they buy from us, and this would be subject to their tariffs. You can see there, capital goods, industrial supplies, travel services, by the way, includes education. When the Chinese come here to go in a hotel, when they go to Niagara Falls or they go to South Dakota or wherever, or they come to one of our schools, that's an export of services in the trade accounting. Food and beverages and autos are the other top 5
food
areas.
Food includes agricultural products.
Exactly, that would be in there. And then I want to show you one of there, which is just a drill down on services, which total to $56 billion. There's travel, which includes education, charges for intellectual property, which I believe the Trump administration believes should be quite a bit higher than it is, transport, financial services, and maintenance and repair services. Here's a couple other issues. In 2015, which is the latest data we have, U.S. companies did $291 billion in sales in China. That's not even counted in the trade data. Why? Because it's not exported or imported. It's just sold there. These are majority-owned companies. Could they be vulnerable to Chinese retaliation? Here are the keys to some of the pain. Are there substitutes available in either country or around the world for those products? Are products used in the supply chain to increase value added that would magnify the economic impacts? For example, industrial supplies or machine tools that would compound the economic effects. So it could be, for example, a tariff on $10 of goods, but if those $10 in an economy become $20 or $30 of output, that's the way you would inflict pain if we get to that point.
So their exports are more valuable than ours because they're more involved in the supply chain?
I think so. I'm not sure, but I think we can. Here was the old story. If you want to sell me sneakers at $3 that I sell in this country for $80, I'll take that trade all day long.
That's Nike. That's
I didn't say that. Exactly.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.